Hey guys, let's look at the Fed expectation, the current Fed expectation, and growth and inflation in the US using US 2-year yield and US 10-year yield. I think I've posted this 2-year yield. I gave you the outlook on my Telegram community this morning. So if you are not a member of my Telegram community, link in my bio to join my community and subscribe to the channel as well to be part of my community. All right. So this is 2-year yield talking about Fed expectation. So whenever 2-year yield is going down, it shows you that we are expecting a rate cut. And right now, currently, you can see price structures is giving us a bearish structures, taking out the recent lows, telling us that the sellers, the Fed expectations are to cut rate. They are looking for a future cut rate. That's why price is selling down. So currently now we're having the rate at 3.771%. This is the current rate of Fed. So whenever it sells down, it's telling you that this is a future rate cut expectation. Right now, on the USA, they are expecting a future rate cut because what the US 2-year yield is currently on a bearish structures. Unless it reclaims back, hold back these structures, they are expecting it back to this high or probably come back to this highest level that started the whole selling opportunity. Then we have the inflation and growth outlook, which is using US 10-year yield. US 10-year yield is talking about inflation and growth outlook. For those of us that doesn't know about it, I'm just explaining it, but because I've talked about it before in my previous videos, so you can watch that, right? So US 2-year yield, US 10-year yield is talking about inflation and growth outlook in the USA. So whenever it's going down, it's telling you that there are slow growth and inflation in the USA. And whenever it's going up, it's telling you that the growth and the inflations are getting high. And whenever it's getting high, USD strengthens. Whenever it's falling, USD weakens. So it's easy to know what is happening in the USA, the inflation rate and the growth rate. Why the 2-year yield? We use it to know the Fed expectations, what is happening in the rate, whether the rate is going to cut. Like recently, we saw that we are expecting a future rate cut using the 2-year yield. So now looking at the what is it called? US 2-year yield. US 10-year yield, which is talking about inflation and growth. You can see the price is still bearish, telling us that the growth and inflations of the USA are slowing down. That is why they are looking for a rate cut. And whenever it's slowing down, you notice bearish USD goes bearish. That's why USD CAD is going bearish. Today you can see USD CAD stay on a bearish structures because what? Inflations are slowing down, growth are slowing down. Rate expectations, they are expecting that rate is going to cut. That's why you are seeing this momentum move, USD going bearish, USD selling. See it? So the current expectation now in the growth outlook is 4.286%. That is the current growth rate of the USA, telling us that the sellers are still dominating the market. The price is still weak, growth is weak, inflation is getting weak. So this is a brief outlook on the US 10-year yield, showing you what is currently happening in the growth and inflation outlook, and Fed, what the Fed is actually doing right now, what they are expecting. So they are expecting a rate cut. That's why you see price selling down. So if you are not a member of my community, you can subscribe to the channel to join my community, or link my bio to join my Telegram channel. All right. So this is it, guys. Take care and bye for now.